Welcome, everyone. Thank you for joining us today for our webinar on cryptocurrency basics and investment strategies. My name is Brooke May, and I'm a managing partner here at Evans May Wealth. Over the next 45 minutes, we'll discuss the foundational concepts of cryptocurrency, what it is, how it works, and the potential risks and opportunities it presents to investors. This is meant to be an informative webinar, not a preview of a change in your investment strategy. We identify seminar topics based upon client conversations. We've had several people who've shown an interest in understanding more about how cryptocurrency works. Our goal today is to provide you with an expert that can provide these insights. Before we begin, please know that the webinar is being recorded and a replay will be posted on our website, evansmay.com. Thank you to those who've submitted questions in advance. If you have questions during the webinar, please submit them using the Q&A feature that you can find if you hover over the bottom of your Zoom screen. We'll have time at the end of the webinar to address those questions. Now to our speaker. We are thrilled to welcome Ann Bartels, Chief Investment Strategist at Sanctuary Wealth. With over 40 years of experience in financial services, Ann brings a wealth of knowledge and insight to our discussion on cryptocurrency. In 2024, Ann was the recipient of the Wealth Management Industry Award, Wealthy, for RIA Thought Leader of the Year. In recent years, Ann was focused on the evolving landscape in decentralized finance, also known as DeFi, blockchain technology, and cryptocurrencies. She's completed specialized training through the London Real DeFi Academy Accelerator Program and actively participates in their investment club. Her insights have been featured on platforms like Bloomberg, CNBC, and Fox Business. And she's been quoted in leading financial publications, including the Wall Street Journal, Financial Times, and Barron's. Please join me in welcoming Ann Bartels.
Thank you, Brooke, so much for having me. And this is an educational conversation that we're going to have. And let me start with my background, how I got into understanding crypto, because I think that's important. I retired from Merrill Lynch in 2020. And, we were entering COVID. So for the first year, I really enjoyed being at home with my family during COVID. Didn't like COVID so much, but I enjoyed my time with my family. And then after a year of being retired, I was kind of bored. And I said, there's something to this crypto, and I never had the opportunity to learn about it. And I said, well, let me start taking some courses because I think there's something here. And I took several courses in the crypto space and actually traded crypto to understand it and understand its behavior. So the first thing we have to understand is that there's a technology called blockchain. What's blockchain? Well, every bank you transact with is using blockchain. It is the technology that transactions are happening on. It's called a blockchain because this is a simplification. The way the program works is you do a transaction, and that transaction will stay, and then you'll do another transaction, they'll get linked together. You do another transaction, that will link together. So it creates a chain. And in the world of programming, it is harder to hack blockchain than it is other programs. The one thing I have learned from working with programmers most of my life is that every program is hackable over time, right? It's kind of, we create a better program and then the hackers learn it, we create another program, and of course there's even a whole field of cybersecurity. That's just the world that we currently live in. But blockchain is a ledger of debits and credits, and transactions on the blockchain have to be verified. We are moving into a world where eventually all transactions will happen on the blockchain. Example, I'm sure many of you have bought real estate and you remember those 20 some odd pages you would have to sign. Well, that's eventually going to all go away and everything will be done on the blockchain. Well, crypto trades on the blockchain, but remember I said all your finance is already on the blockchain. Wall Street is already in the process of shifting to blockchain. There will come a day where all the securities, all your stocks, all your fixed income, your ETFs, your mutual funds, will all be on the blockchain. This is where we're going. This is what's called kind of Web 3. So this is the next generation of the internet. So let's review the internet. The internet kind of popped along in the 1990s. But if you remember, the internet used to not have a lot of applications. We really started with email. And if you only had email, it was really hard to determine the difference between the internet and email. It wasn't until you started getting other applications that you realized that there was this program behind it. And then you had your different applications on the internet. Well, the original internet was read-only, pretty much. Then the internet graduated to read-write. You could write on the internet. Well, Web 3, right? Web is the internet. We just don't use that term. So Web 1 was read-only. Web 2 was read-write. Well, Web 3 is read, write, own. You will be able to own things on the blockchain. So you have blockchain and you have the internet. So this is the next level of the internet. Crypto trades on the blockchain. So what is crypto? Well, before I go into the more of like the definitions and the explanation, as we evolve with technology, think about when you were growing up. Think about what kind of technology you had. Well, if you're in my age range or older, we didn't have technology. Going from a black and white television to a color television, that was our technology. Our phones, right, where most of us had one. Mine was in the kitchen. A lot of people had their phone in the kitchen because that's where everybody hung out. When we went from a short cord to a long cord, I was a teenager. I was so excited because I could go down the stairs and my parents didn't have to hear my conversations. We didn't grow up with technology. I grew up with a typewriter. Thank heavens, electric. Even when I went to work, we had word processing. We really didn't, in the 1980s, in the workforce, in the mid 80s, wasn't really to the later part of the 80s that computers started showing up. Everything that I did while I was in college was on a typewriter. That was my technology. So technology is not innate in me because I didn't grow up with it. But if you think about the younger generations, and you don't have to go down too many generations, they grew up with technology. It's like a part of them. It's innate. It's an instinctual relationship, and they're comfortable with it because they grew up with it. So crypto, the one that you hear, there's two that you hear a lot about. You hear a lot about Bitcoin, and you might have heard about something called Ethereum. There's also something called XRP and Solana. Those tend to be the general names that you hear, but there's hundreds of cryptos, hundreds. So let's start with one, Bitcoin. What is Bitcoin? Bitcoin is an algorithm, and it's limited to 21 million. So there will only be 21 million Bitcoin created. And when they created the internet, they did not create a currency to transact on the internet. Bitcoin is that symbolic cryptocurrency. It is a form of currency. This has been validated by our government that it is a currency, and it's often referred to as gold. Now, it doesn't trade like gold. The first thing I probably should have said is crypto and everything from Bitcoin, Ethereum, XRP, all the crypto is probably the most volatile assets I have ever witnessed in my entire investment career. Bitcoin itself, on average, can go up 80% or go down 80%. That would be normal. There are some that go up hundreds of percent and then they go down hundreds of percent. But what's interesting about Bitcoin is that it goes up and down, very volatile, but it trends higher. There are several governments that have tried to stop Bitcoin from even being in existence, including our government, including the Chinese government, but it's still here. This is not going away. So Bitcoin is, think about it as money on the internet. Now, a lot of people will say to me, but Marianne, we can transact with PayPal, we can transact with Zelle. Venmo, we have credit cards. Well, those are forms of moving money. They're payment mechanisms. They're not a currency. Where Bitcoin, you can buy and sell things with Bitcoin. Now, not a lot. There's not a lot yet that transact. I would say it has been fastly adopted more in emerging markets than developed markets because it's harder to actually find banking when you're in an emerging market. Also, your money isn't necessarily as safe. So you'll see more emerging markets be more active in the Bitcoin space. So only 21 million, which is why it gets referred to gold, even though it doesn't trade like gold, it gets referred to gold because it was designed to be limited in scale. Now, I understand that you can't touch or feel it. It's not like having a dollar bill. It's not like having coins. How do you value it? So think about the technology. Think about the music from the 40s and the 50s. Very calm, soothing, relaxing. And all of a sudden, this guy called Elvis Presley comes along. And he goes on TV and moves his hips, which was a no-no. Can you believe that? A no-no to have somebody on TV moving his hips. Oh, and then the Beatles come along. Rock and roll starts coming into fashion. You have Mick Jagger, right? And the music, the sound is so different. Well, think about the generation that grew up in the 30s, the 40s, and the 50s. They didn't like rock and roll. You know, there were some that thought that was terrible music. But yet, from a generational standpoint, the younger generation embraced it, and that music flourished and is still flourishing today. Well, kind of think about crypto the same way. This is something new, and it is going to be here for a long time. Does it mean you have to embrace it? Doesn't mean you have to embrace it. But just because you have maybe a negative view of it, doesn't mean that it's not going to be sustaining or embraced by the younger generation. Very similar to like an Elvis Presley and the Rolling Stones and rock and roll. And sorry, I mentioned, the Beatles and the Rolling Stones, which are British, not American, but I think you've got the concept. This is new and in fashion. If you have younger people in your family, ask them to take out a dollar bill, a $5 bill, 10, 20. Do they have any coins in their pocket? My guess is none of them have any kind of currency in their pocket, nor do they want currency in their pocket. It is not their norm. It's our norm, not their norm. And, I kind of joke about it, but it's also kind of true. You've got to move the older generation out, the more like the baby boomer kind of generation, and move them through to really get all of this fully adopted. The other analogy I can give you that might help is Star Trek. And this is very tangible. And I know there are Star Wars people out there, and some people say Star Wars is better than Star Trek. I'm not trying to compare the two. It's just where I see the technology and how it gets implemented. So let's go to Kirk. Let's go to his flip phone. Do you remember flip phones? It was our first phone outside of the real, we had these big giant things with antennas. The average person didn't have that, but some people did have these big phones. We eventually wound up with flip phones. Go to Star Trek: The Next Generation. Look at the consoles. Those are iPads. Look at the communications officers, Aurora. There's an earpiece and they talk into the earpiece. I'm sure you walk down the street and see many people and it looks like they're talking to themselves, but they're talking to the earpiece. They're talking to someone. Think about the hologram. Well, we have virtual reality. Today we wear headsets. Eventually, maybe we'll be walking into a hologram. We won't need the headsets. What was the currency on Star Trek? Well, Star Trek had two forms of currency. The first one was called latinum. It was a metal, not stable, that they put into gold. So gold was a form of currency, just as it is today. The other one was called Federation credits. Well, what's the blockchain? It's a ledger of debits and credits. Where does Bitcoin trade? On the blockchain and can be used as credits. So I think Bitcoin is very symbolic of us having currency on the internet. Now, there's something that's also called stable coins. And most, not necessarily all, stable coins are backed by the US dollar. They actually have to own the US dollar. Banks are already developing their own stable coins. Central banks are already developing their own stable coins. The World Bank already has its own coin. You kind of get the picture that I'm painting? The world is moving whether or not we're on this train. Crypto is the new form and and Web3 is the next level of the internet. Now, Bitcoin is believed in the industry to be a form of transaction currency. Cryptocurrencies aren't necessarily currencies. So let's look at Ethereum. Ethereum is the second largest crypto. In fact, when we look at the crypto market today, it is about $2.8 trillion in size and growing. And the majority of it is made up of Bitcoin and Ethereum. But Ethereum is not a currency. Ethereum is a technology. And I want you, it's not an exact comparison, but you can kind of think of Ethereum as like a Microsoft, right? It's a form of technology, but it's a technology that programmers can program on and develop applications. So it's an internet, it's the next generation of the internet, and you can develop applications. There's another one that's called Solana. Solana competes with Ethereum. There are some that are developing projects, or they call them smart contracts, on Solana. There's a contract that's called XRP. That program allows you to move money internationally. Now, the beauty of crypto and why we call it DeFi is the younger generation didn't like that they were controlled in how they could use their money and that it was locked up in a bank and they couldn't always access it. The crypto market is open 24/7, 24 hours a day. And you can move money instantaneously. In fact, I can move money faster in the crypto space than I can to move money from a US bank to a UK bank. Yes, you heard me correctly. I can move money faster in the crypto space than I can from a major bank in the US to a major bank in the UK. And eventually you'll see the banks be able to work in the crypto space. In fact, the CEO of Bank of America has publicly stated, that's Brian Moynihan, that if they're allowed, they will go into the crypto space. It's the regulation that they're waiting for. So the crypto market is real. I understand it's not tangible necessarily to everybody, but the younger generation doesn't care because nothing has been tangible to them. Everything has been online. And so online is their comfort zone. But if you're of a certain age, being online is not being in your comfort zone. Now, you may be saying, this is not an investment for me, and that's totally fine. You don't have to be in this space. This is again, we're doing this for education. But if you're planning for generational wealth, you may want to talk to the people that you're planning for to see if they're interested in the crypto space. And you might want to ask them if they already own crypto. And there's a high probability that they already do if they are of a certain age. I have been shocked to find out how many young people are already in the crypto space. So those are my kind of prepared remarks. I didn't want to get into too many of the nitty-gritties, and hopefully that has given you a general overview of crypto. And I'd be happy to take any questions.
Thank you, Marianne. We do have some questions, and I'll just start right from the top here. Can you help us understand a little bit more about the volatility that exists in the market? So why is it so volatile?
Well, I would have to say that one of the reasons why it's volatile, because the crypto space is still kind of in its infancy. In fact, one thing that I left out that's very important is think about crypto as the early stages of the internet during the late 1990s. There were many companies that got launched in the late 1990s that never flourished. They died, but there's a few that lasted. You've got your Microsofts of the world, the Apples of the world. There's many crypto, as I said, there's hundreds of different cryptocurrencies, but many of them are not going to survive. It's early stages. Not the whole world is invested in it yet. There's liquidity, but not liquidity in the sense of a ton of world liquidity. I think we have to have it more efficient, more regulation, more investors in it, create a more mature market for some of the volatility to die down. Think of it as a penny stock. That would be a good analogy on Wall Street. Penny stocks are always considered very high risk, very volatile, low cost, right? When you have something that's low cost, just moving a couple of pennies is gigantic. And remember, Bitcoin originally started in pennies, and we're in the thousands now. But I still think the volatility is evidenced of not a mature market yet.
Thank you. Following along with that, you've said there's hundreds of cryptocurrencies. It's not a mature market. How do you assess whether a specific cryptocurrency is legit, if that's the right way to say it, or just hype?
So I would say Bitcoin is legit because you had regulators create product, right? We have ETFs, we have futures, we have options that the regulators have validated. You have that on Ethereum. It's expected on Solana. But without validation from governments, I think then you get more into the speculation. But understand these were already speculative and then have been validated. It's really about doing your homework, understanding the technology. Remember, I said Bitcoin is the only currency. Everything else is a technology. It's a business. And you have to determine whether or not you think that business is going to make it and thrive. Think of it as venture capital, early stage in investing. And if you're in VC or venture capital, you know that many of the companies are not going to make it, but you're hoping that one or two do and make up for the ones that you lose. So the theory in terms of investing would be is you buy a basket of them in the hopes that only a few actually make it.
So buying a basket of them would be different than going into a Coinbase or some sort of crypto exchange. How do you get started, I guess, is
Well, this is it. We don't have a lot of product yet. That's easy. We have an ETF for Bitcoin and we have an ETF for Ethereum. And that makes up the majority of the market cap. But if you want to go in today and buy a Solana and buy an XRP or buy Chainlink, you have to go into a Coinbase or you have to go up to an exchange that trades crypto. And then the question is, what wallet do you use? So the other terminology that you're going to hear are wallets. Where is crypto stored if you don't have an ETF? It's stored on a wallet, and there's a hot wallet and there's a cold wallet. A hot wallet is on the internet. That would be like a Coinbase, an app. But if you want to buy it from an exchange, you have to store it somewhere, and that's called a cold wallet. And you don't own, it kind of looks like a USB port, and you kind of put it into your computer and you kind of save it on that. And a lot of people believe that their Bitcoin or whatever they've transacted in is on that little USB port. It's not. Your password to where it's stored on the blockchain is. So you never physically own it. You own the password to where it is on the blockchain. And if you forget your password, there's no help, there's no reset. And that's why many investors have not owned crypto, because there is very high risk. You lose your password, you lose your crypto. In fact, when I was doing my educational work on it, there were many people that I was learning from that owned crypto on this little USB port, and they had many of them, and they stored them all around the world, which I found fascinating. And I'm like, the average person is not going to do that. You're not going to get full adoption from individual investors until you make it easy and relatively safe, and you don't have to worry about your password. And we only have that right now with ETFs if you want it in your portfolio. Now you can go up, and Coinbase can own it. And that is called a hot wallet because it's on the internet. And for full disclosure, I do own cryptocurrencies, and I do have a Coinbase account, and I do own many of them as a diversified basket. And in that case, I have ways of getting a password restored, but there's very few applications where you can get a restored password. So we really need to improve and mature the industry before we get full adoption.
So to confirm that I'm understanding correctly, if you're in an ETF or you have a hot wallet, the lost password and your Bitcoin is lost forever story doesn't exist in that world, but it does if you have a cold wallet.
Correct.
Okay, interesting. As we think about cryptocurrency and the evolution over time, there are lots of stories that include hacks, thefts, criminal activity, and then for the non-criminals, just the loss of the password. How would you characterize the reputation and security of Bitcoin and other cryptocurrencies today?
Okay, let's be real. There is illegal activity in everything, right? Remember when The Sopranos were popular? Right? There's always, if there's ways to make money, there's always going to be criminal activity. Believe it, I know this is going to be hard to believe, but it is, you get more clarity on the blockchain than you do anywhere else. Now, most people believe, especially the younger generation, believe if they own Bitcoin on the blockchain, the government can't take it from them and can't confiscate it. And that's not correct. Our government has confiscated Bitcoin from illegal activities. You know, you have to get a subpoena. You can find that even it's not, your name isn't attached, it has numbers and addresses, but the government can find you and can confiscate your crypto. So it's actually easier to find criminals on the blockchain than within the current system that we actually have. And that doesn't get talked a lot about. And what doesn't get talked enough about is you think your Bitcoin is safe from regulators, and that's not necessarily true. If the regulators want to find you and confiscate what you own, they can. And history has shown that in the United States and around the world. There is no absolute 100% safe place. And you are going to have hackers, right? But you try to have the best protection and have the best passwords, have the best software with security systems that you possibly can have, right? But this is the world that we're in. And, you know, part of the pushback that I'll hear too is what happens if electricity goes down? Well, then we're all in trouble. It's not just about our finances. There's a lot of things. And you just saw Europe lose power, parts of Spain and Portugal. You know, when power goes down, it's a lot more than your bank account. It's a lot more than the blockchain. There's a lot of things that get disrupted without electricity. So the one thing that is coming from blockchain, that's coming from moving think of it as our files to the cloud and how we're moving towards artificial intelligence, is the demand for electricity is going up for the first time in 20 years. And that's on a global scale. And that has not stopped. We've kind of stopped talking about artificial intelligence because of the tariffs narrative. But we have seen major companies like Alphabet, also known as Google, Amazon, still telling you that they're fully committed to building out the infrastructure for artificial intelligence. As I said, just watch Star Trek and you'll see where we're going. Star Trek is your model. And the other model would be the Jetsons, if you remember that cartoon. You can either be on the train or not. You don't have to accept it. It's like my mom never accepted credit cards. My mom felt that her number could be stolen. And so my mom always transacted with cash and never, very rarely ever used a credit card. But look at the world today. Everybody has cards, right? So what I'm just trying to explain to you, whether or not you like it or not, the world is moving to blockchain. It's moving to the world of Web3 and crypto and cryptocurrencies and stablecoins, which are backed by the US dollar, are all the direction that we're moving in.
So let's, we've got a number of questions coming in here. Let's think through, you've bought crypto, whether that's on an exchange or in an ETF. Can you talk me through what it takes to liquidate it? So I bought it and now I want to sell it. What does that look like?
So an ETF is just like buying and selling a stock. Just buy it and sell it. Now, liquidity is always important in any kind of market. So we have not seen liquidity issues in the ETFs for Bitcoin or for Ethereum. I will, just from my experience on Wall Street, you can always buy, but sometimes selling, you can always sell, but there's a price if there's not a lot of liquidity. But if it's a normal, regular market, just buy it and sell it. There's enough liquidity to buy and sell. And my example to you in terms of the adoption would be to look at, and I'm not recommending it. I'm just for observation, the largest ETF for Bitcoin, because there's about 11 different ETFs, but the largest one is the BlackRock ETF. The ticker symbol is IBIT. And the majority of investors in IBIT is not institutional, it's retail. And I got that directly from BlackRock. And that has grown to billions of dollars overnight. And I'm talking about an industry still in its infancy. This is, I said, the whole cryptocurrency market is about $2.7, $2.8 trillion, right? That in 10 years' time, that's going to be more than double.
So that's good. I have another question here. How do you see Bitcoin's evolution with the continued rollout and adoption of global government-backed digital currencies? And does that help sort of complete the circle or close the loop on the digital gold?
That is a phenomenal question. It's the right question, and no one has the answer to that. No one has the answer to what this is going to look like. Because as I said, we have stable coins, which is US dollar. And there's more than one. And we have Bitcoin. You have gold, right? The World Bank has a token. Now, in my personal own world, if I do a Star Trek analogy, I can see the world one day having just one currency, right? But is that in my lifetime? Probably not. I think this is a very slow evolution over hundreds of years, where the US will have its digital currency, Europe will have its digital currency. In China, they already operate almost 100% in a digital world. They don't transact in paper anymore in China. So everyone will have their own digital currency. But how this all evolves and transact, not sure anybody really knows the answer to that yet. And who's the winner and the loser? I think Bitcoin right now is a winner. Is Bitcoin here in 100 years? I don't know. Is Ethereum the technology that we program everything on, or is Solana going to be the winner? I don't think anybody knows yet. This is so early stages that we don't know. But what we do know is that the world is moving to the blockchain, that everything will eventually transact on chain. That's kind of the terminology, will transact on chain. But we're still in the infancy of developing all of this.
Do you have any thoughts, and maybe this is in that same category of who knows, but on how cryptocurrency, maybe Bitcoin in particular, may affect the value of gold and the dollar, and how those might interact as distinct?
It's a great question. If we look at what's happened today, gold has been a much better performing asset class in times of volatility, stress, uncertainty. Not Bitcoin. But however, Bitcoin is actually trading better than the equity market near term. So, well, when I looked Friday, Bitcoin was up just over 1%, while the market was down about 6%. I would say in a world of today, and maybe even over the next 5 to 10 years, gold will still be an asset class. Why? Central banks are diversifying their holdings, and gold is a big portion of part of their balance sheet, particularly in China. China's been very aggressive in adding to its gold reserves. So I don't see gold changing its characteristic. There's a lot of concern about the US dollar with tariffs and foreigners dumping the dollar. I don't think the US dollar is losing its status. I do think there was a knee-jerk reaction because so many foreigners own so many dollars, whether it's, central banks, whether it's in portfolios, owning equities, owning government paper, even just regular fixed income paper. The world owns dollars. And with the tariffs, I think there was a wake-up call internationally that we don't want to own as many dollars, but it doesn't mean they're selling all of their dollars. And when I look at artificial intelligence, now this is my own personal view, and you look at where the technology is being developed, most of it, and who the leaders are, the companies that are real, have a solid balance sheet, have cash on the balance sheet, they're all here in the United States. We're still the leader in technology, no matter what you hear from anyone else. China, are they performing? Absolutely. Are they going to be the leader in AI? I don't think so. Because think about it also this way. Would Europe rather transact with the United States or transact with China when it comes to artificial intelligence? I'm going to argue they're going to come to the United States. Germany just announced that they're going to spend €1 trillion on defense and infrastructure. Well, who owns most of the technology and true manufacturing of defense? The United States. If they really truly want to develop the technology and buy the technology that's needed for defense, have to come to the United States. So I think there's been too quick of a knee-jerk reaction that we're getting rid of the United States. We're not getting rid of the United States. Yes, the tariffs have been a hiccup, and we may have a black eye or two on the political international front. But we have not lost our stature as being a major leader. And we are still the reserve currency of the world. So when you're looking at Bitcoin, when you're looking at gold, or you're looking at the euro, or the yen, or the Swiss franc, or the pound, they're all still going to be with us for a long time. I think this process takes decades. And I'm not even sure I'll see the whole transition in my lifetime.
Is it fair to say then that Bitcoin is not a threat to the US dollar?
I don't think it's a threat to the US dollar.
Okay.
Now, again, what you have to think of is the younger generation wants to go digital. They don't want to be controlled by a government. And they feel Bitcoin is that asset class. So you will see younger and younger people diversify their portfolio into Bitcoin. Where we are in 100 years might be way different. And I would argue in 100 years, we're going to look very different. The US dollar may not be it. It may be a stable coin. So right now, I don't see any threat to the US dollar. And remember, Japan is the largest holder of our treasuries, not China. China owns a lot. And if China dumped all our treasuries, they're only shooting themselves in the foot. This is about a reallocation over a period of time. My sense is if the faster we can resolve the tariffs, the faster we can restore our reputation internationally. And when I look throughout history, humans have a very short memory. So if there's not a lot of collateral damage done, this will be something that's forgotten. When you have a lot of collateral damage, then you have a lot of memory. Like when I go to Europe, there's a lot of memory of war that just passes down through the generations. If we can resolve this without too much damage, eventually this will be forgotten. Just like most people forgot that there were tariffs in 2018 when Trump was in office. But again, the faster we can do this, the faster things will resolve. But I don't see the dollar under threat. Maybe in time, as the world goes digital, but you're going to have to lose a lot of baby boomers before that happens. And and we're not losing a lot of baby boomers yet.
So it's interesting to think through the appeal, particularly for the younger generation, of cryptocurrency being more of that DeFi approach, versus then Bitcoin maturing and becoming potentially more regulated, sort of the opposite of decentralized finance in some ways.
Yeah.
How do you square that?
Well, as I said, I don't think some of the younger generation truly understands that it's deregulated, but it's going to be regulated and the government can find you. But the concept is that you'll be able to move money a lot faster and where you want, and you're not going to be controlled by a major bank. I think that's most of the appeal, is that you want to be able to transact when you want to transact. That I do believe will happen for sure. But it's just how the world is. If the government wants to find you, they find you. I mean, I'm of the believer, like, you have to go up into the Alaskan bush if you don't want to be found and not transact.
So are you saying in the world of cryptocurrency, transactions can happen 24/7?
Yeah.
Okay. And that's
anytime, anywhere. I could sit here on my laptop and send money anywhere in the world in a matter of seconds. And I can't do that at a regular bank.
So you mentioned, and I'm not super familiar, I'm wondering if you might be able to expand a little bit on XRP, and you said it allows for international money movement. Am I not able to move Bitcoin internationally without XRP, or what role does XRP play?
You can. You have to have a person's address.
Okay.
But this is more of a platform for businesses to be able to and have it done in a more secure way. And we don't know who's going to, as I said, we don't know who the winners and the losers are. But what I will tell you, what I've learned in the crypto space, is when people believe in a particular crypto, they become like designated big fans, and they stay with that crypto. Because there's one that's called Cardano, and people thought Cardano was going to be better than Ethereum, the people that are in the Cardano space, and Cardano hasn't done anything. So I think you have to hold a level of skepticism in everything, but where you can't be a skeptic is that the direction of the world is crypto. How you navigate crypto is you have to still be very cautious. The only particular crypto that I have the most confidence in would be Bitcoin, because that is being adopted around the world as a currency. We don't have full adoption. Again, everything else is a technology. We don't have full adoption on who's going to be the winner and the loser in anything. But if I want to move money around the world, I need a person's address. Like I can go up and I can do it on Coinbase. I can do it on a platform called, oh, what is it? MetaMask. Even I forget some of the names. So there's different platforms I can go to. There's different exchanges that trade crypto where I can move money. I don't necessarily need an XRP to move money, but I need the address. But let me tell you, it is very nerve-wracking because the addresses are about 40 letters and numbers long. You've got to get everyone absolutely exactly correct.
Mhm.
That's the other thing. It's not easy to move it. We need applications and software. So we're not typing and plugging in this very long address and get one letter or one number wrong, that we go to the wrong place. And that's why when I'm moving money, I always start with $1 and I do a test.
A test, yeah.
Before I move, and I have moved thousands of dollars, and my heart's pounding and racing, but I always do a test of $1 first.
Mhm. So can you help me understand when you might choose to move, let's say you own Bitcoin, you're moving actual Bitcoin as opposed to moving Bitcoin to the traditional banking system and then using the confidence that you have in the traditional banking system to move the same value?
Okay, so if you want to invest in companies that are doing Web3, in other words, doing venture capital, they only accept stable coins, Bitcoin, and how do you pay them? I can't go through a regular bank.
I see.
Now, there are some that will take actual US dollars, but
Mhm.
many of them will only take stablecoin or Bitcoin.
Okay.
And the only way I can transact is I have to own that and I have to move it on a platform.
Interesting. Do you see any issues in the traditional banking system due to further acceptance then of stablecoins and potentially
No,
interest-bearing coins? No.
no, based on listening to CEOs, they're ready to move in the crypto space. They're experts. When I left Bank of America in 2019, Bank of America had 23 patents on blockchain, or maybe even more. The banks are the most sophisticated and have the highest security in the world in transacting money. So when they get the ability to be in the crypto space, and they're likely to get that, the world will change in how we transact. We're moving in that direction. Now, when is that happening? I don't know.
Do you think there's any risk that a government could sort of take away the ability to transact in the world of cryptocurrency?
Well, if you were in emerging markets, and if you talk to investors in emerging markets, they would tell you the answer is yes, because it's happened to them. We have not seen that in the United States since the 1930s. The last time the United States controlled anything was in gold during the 1930s, where they took American gold away. You were not legally allowed to own gold. A lot of people forget that. So in theory, any government can come in at any point in time and confiscate anything. That's what I've had to wake up and realize. It's even happened in American history. Do I think that's likely in the United States? I do not think that's likely. But when I've always talked to investors in emerging markets that have built wealth and lost wealth, they always keep a portion of their wealth in gold, because they have seen their wealth taken from a government or by the government.
Mhm.
It's more of a risk in emerging markets than developed markets.
So we've talked about owning crypto. What about taking more of the, I think it's called the picks and shovels approach, where you're investing in the companies that are related to the crypto industry instead of directly in the crypto?
So one of the examples would be the miners that create the computer technology to actually create Bitcoin and other cryptocurrencies. I'm not a big believer in miners personally. Their stocks are very volatile because I don't see the end game for miners necessarily. There is a company called MicroStrategy that has basically built up a very large reserve of Bitcoin, and that trades more, that has more volatility than Bitcoin itself. But it is a way of owning Bitcoin if you don't want to own Bitcoin, but you want to have exposure to Bitcoin. A company, it's now called Strategy. It used to be MicroStrategy. They renamed themselves to Strategy. That's one way you can do it. But again, that's an extremely volatile stocks. You can own it through the picks and shovels. There's a lot of other companies that are involved. But my belief, and this is my personal belief, if you believe in something, you want to own the actual. I'll give you an example. Look at what gold has done over the past year. It's up over 20%, but look at the gold mining stocks. They're not up over, like they don't trade the same. So just even if you own the picks and shovels, don't expect the same return. So gold for the past couple of years has gone up and gold mining stocks have gone sideways. Part of the reason is gold mining companies hedge their gold exposure. And you need to get to a certain level of owning. Now the gold stocks are finally reacting. But just owning picks and shovels, you can't expect the same return from the asset class.
That's interesting to think through. The
Look at
volatility.
oil companies. It's like
Yeah.
oil companies and oil.
Yeah.
They trade very differently. Picks and shovels will trade differently. Doesn't mean that you can't get some return, but you can't expect the same exact return.
Okay. Interesting. We've talked a little bit about cryptocurrency exchanges. Coinbase has been thrown out there. Previous headlines have highlighted FTX, now defunct. How do you, if you choose to do the exchange route to explore cryptocurrency, how do you find the right exchange? I guess, what are the options that are out there and how do you sort of vet them?
So I'm not even going to tell you some of the exchanges because nobody, well, like MetaMask would be one, but MetaMask is not an exchange because not only do you need to go to an exchange, you need a way of moving money to and from the exchange. So you need an intermediary. It gets very complicated. For the average person, I think the ETF is the right route. I don't want to call it the safest route, but in many ways it is the safest route. If you really want to understand how they trade, go get a Coinbase account and, buy $100 of, let's say, 5 different cryptocurrencies, Bitcoin, Ethereum, Solana, Chainlink, XRP, and watch them trade and watch how your portfolio gyrates. And I've recommended that to some people to get a feel for what that space is like. Watching your own little mini portfolio. But in today's world and regulation, the ETF is considered the safest route.
Okay. Good. And so kind of a two-sided question here. Skeptics about cryptocurrency, what do they not understand that you would want to sort of call out? And then the second part of that is advocates of cryptocurrency, what are they getting wrong? So
So the first one is that it's not tangible. You can't touch it. And like Bitcoin is not backed by government. It's not backed by an asset. So a lot of people are like, it's air pudding and wind sauce. How do you put a value on it? Well, the explanation that I give is how do you put a value on a piece of artwork? It's by last sale. It's what the buyer's willing to pay for, right? It's easy to mention a Picasso or a Monet or a Pollock, but if you want to look for that new Monet, well, somebody else has to find what you find and has to be willing to pay for it. Now, I understand in the art world, then you own something substantial, you physically own it. The skeptics say, but you don't own anything, you own an address. But as I said, the younger generation doesn't have a problem with that because their whole world has been out in space. And I said that intentionally. It's just out there. It's not tangible, and not tangible to them is fine because their world has been non-tangible. What are the ones that are fans? What are they missing? I don't think they're missing anything. I think there's frustration that the world hasn't adopted it fast enough. And they're frustrated because they want regulation. They actually want clarity and regulation. They don't want to break the law. They want guidance, and they need more guidance. We still don't have enough regulation around crypto. And that's not just here in the United States, that's globally.
Interesting. Last question here, related to regulation or sort of Bitcoin, cryptocurrency landing on the stage, if you will. What do you see as the significance, if any, of the crypto strategic reserve in the United States?
So I'm a believer, this is my personal belief, that we will have a crypto reserve. And part of the theory behind that is that will help pay off our deficit. And I do think there's something to that. But that's over time. That's not an immediate answer. That's where you believe that, let's say, like a Bitcoin will go up in price over many decades. But I do think you are going to see a reserve occur here in the United States. I mean, obviously, President Trump has talked about that. And I do think that it can be part of a solution to our deficit problems that we have.
Excellent. Well, thank you, Marianne. This has been very insightful, interesting. I love your analogies. Sometimes this is another language.
It's a total another language, and it really is out in space. It's out there. And it is very new. And just think of it as the new rock and roll of our time.
You're shaking your hips for us today. To all of our attendees, thank you for joining us. We hope you found the session informative. Please reach out to us if you have any questions and let us know how we can be of assistance to you and your family. Thank you again, and have a great evening. Thank you, Marianne.
Yeah. Bye-bye.